Hello. What's going on, everybody? Happy Wednesday, middle of the week. Technically for us, it's like now, week's almost over. Almost completed the week. Hope y'all had a good day. Just doing some chart reviews before I kind of kick off the show a little bit. What's up, Iliad? Google, such a... How'd you do today? Yeah, happy hump day. Except 4-day week. Happy day after hump day. It's a flat week. I'm trading really well this week, but it's a short week. Sub DB. I checked the volume on Tesla today, and it had a total of, I think it was tied for the third lowest volume day. I was just looking at names and levels for tomorrow and stuff. It really hit here and failed. This looks like a grind. Like when you look back at it, it definitely looks like if you just held it or you played the pullbacks and you could have made money. But it definitely seems like this wasn't easy to play all day. I obviously went golfing today. For those of y'all who don't know, went golfing yesterday. Finally broke 100. First time broke 100. It was legit. Shot, I think I had 5 pars, the most pars I've ever got. Everything else was like a double bogey though. And I had like 1 bogey. So it's like I wasn't doing great, but I hit okay. My, nah, this show's about that, but I did pretty good. Yeah, I didn't mind missing a day. My plan was to kind of take it easy this week. Because of it being a 4-day week, usually those weeks are a little bit weird. And because it was going to be a Friday, and I was just like, you know what? I'm just going to take today off. Or this week, and I'm going to trade 30 minutes to an hour, and I'm going to be done. I think tomorrow I'll actually be here all day in the Discord. Whether or not I'll trade all day, I'll definitely be... I'm not going golfing tomorrow, so... And then Friday we're off. We're going to kick it. So enjoy a nice long weekend. So let's get this show kind of rolling. Got some stuff we'll throw in here. We'll talk maybe a little bit about psychology, a little bit about picking trades, trading throughout the day. Any questions you guys have, we'll answer. We'll go over anything from, I don't know, tape reading, how I play different levels, psychology, whatever it is. Anything you got, you can ask me, and I will attempt to answer it. And then we'll do some chart reviews, talk about the week, all that kind of fun stuff. So let's kick it, guys. Yeah. Cheers. All right. I only traded about 30 or 40 minutes today, so just a quick review. Sup, Blademan? Just a quick review. And then I want to do a review of today and then what I think about how this morning traded. So I want to review kind of what I did. I am going to start recording and showing live trades and live stuff again very soon. Looking at this, so I retracted here. I was about to read. Looking at this, Tesla went up really slow. Looked like it grinded up all day. I'll be interested to see what it does tomorrow if it gets above this $23, $24 level at the open. If it does, you're back into this. You're back into kind of this gap here. You filled it, and there's a good chance you could kind of go back and grind up or hopefully explode up to retest all-time highs. Maybe finally set in a higher pivot. I don't know. I still am very bullish in Tesla. Whether or not it goes now or it flags out a little bit and then goes, I am overall very bullish in Tesla. Square. Still like Square. One of my favorite names to trade when it's trading smoothly. Really choppy this morning. It has been one of my favorite names to trade. It's been trading really well. This level never really... This right here broke out above it, tested it, went higher, today. I don't know. Haven't looked at it. It seemed choppy. The whole market kind of seemed choppy. Lulu, talked about Lulu not long ago. Uh, yeah, I really like this name. I think they're at least gonna go. I never hold anything through earnings because I don't think it like necessarily matters. It does what it wants to, and it's been running up so much. But I definitely thought this name was gonna run up. I don't remember when I talked about it, but some of you might thought this name is gonna go. It might continue to go. I don't know. I'm not in it, but one of the names I like. I might try and start trading it some if it does go strong. Amazon, hopefully Rose had a good day. And those of you who played this, if I was around, I probably would have played this. From just looking at the chart, it feels like this would have been easy kind of to play with the Qs and hold on some of these pullbacks, especially if you're looking at the 2 minute like I'm looking at here. Most of the day, every time Amazon, once it went up, it hit the 21 here. 2 minute bounced. This was still in the chop. I left somewhere around here, so I was already gone, but it was strong. It popped some more. Every time it came down, it looked like to the 8 or definitely to the 21. You could just have traded it off the 21 multiple times. So hopefully you guys played that. I saw Eddie say something about it, that it was a really good name. So there was definitely some opportunity today. I don't mind missing it. It was my plan to come into this week and miss a lot of the intraday trading. I thought it was going to kind of be slow and grindy. It's a short week. It's Passover this week, so some people are out. There's definitely less participation in the market, so some of the moves I thought were going to be harder. We know JR's out. So all that stuff being said, I thought there were moves and opportunity to make moves, but it was on lower volume. And I originally hadn't planned on leaving today and going golfing, but then it was like, it's choppy, I'm gone. And I found that it helps me as a trader sometimes to just be like, and I think it was nice today, and the nanny was like, hey, I'm surprised you're not going golfing today. And then I was like, yeah, you know what, I'm going to go golfing today. And so I went, and so I went, and it was just, it felt like I felt good with how I traded early. I called Tesla early. I agree, Blaman. I think Tesla is primed for a massive move. I think we probably, I have no idea. If I just give me an opinion and you said, is Tesla going to break all-time highs this year, I'd say yes. That's just me, though. What up, Eddie? What's going on, brother? So, first name I played today was the Tesla short. CT and I joked, Mitchell too. That's like Tesla finally waited for the 2 minute bar to close before it broke down. And what we mean is usually like it'll be right here and then it'll be sitting there and it's about to close. And on the 3rd minute you can mark it in infidelity. On the 2 minute you can't. So at 33 is when you can market order. I usually have a limit order set up so I can jump in. If I want to on a smaller size, like on a 5 contract tier size or sub that. Thankfully Tesla actually waited, and then this bar went down and I shorted that and caught. I had fairly decent size in that, caught about a point, and I was green from that point, and I didn't hold it, like I didn't want to hold it. I wasn't necessarily bearish on the day, so I just sold the quick money. And here's one thing I want to kind of talk about tonight, and then we can throw in whatever else you guys want to throw in. Is I'm sure y'all have been noticing, if you're in Discord, I've been holding trades longer. Some trades, right? And you guys have seen that. And before we do that, before I go off on this, Discord, if you're watching this, you want to join, there's a link in the description. If you're not a member of this Discord, you can come in and trade with me and others live, free of charge. Just jump in it. 2 things. One, the trade review section, really good. Andrew's been doing some great work over there, and guys have been sharing. Thank you to everybody who comes in and actually shares their trades, who reviews it and stuff like that. If you do have trades you want to review, you can or share with people. You can even post them in the chat and stuff, so people can at least see them and benefit from what you're doing if there's something you noticed, and you can rewatch all of the old shows. Great part of the Discord room. And also, I am looking to, and this is off topic, so sorry for my scattered brain, but I'm actually looking at buying a whole new setup, and I'm going to take pictures and a video of like my current day trading setup with this and all. But I'm moving in June, so I'm going to get a whole new setup, probably a new desk, new like monitors. I actually just bought a couple monitors, and so I'm like, you know what? I'd like to see what you guys have out there. So if you're in Discord, I would love to see your setup. So if you go to showcases, you can actually, there's some rules there, but you can actually go here and you can share your setups. And I'm not going to set up like this permanently, Peacock, but if you have this and you have something that you think, that you think is worthy of sharing, share it, check it out. Maybe you'll inspire me to create my new desk and setup. And finally, another thing I thought has been very beneficial is actually Peacock. He was on the show a couple weeks ago, and he had a hard couple days when he gave back, and he had some stuff going on in his life. And he has been doing a little YouTube series here and getting back on track after some losing days. Very good stuff. So check that out if you get the chance. I will post a link to his let me pull this. I'll post a link to his channel and all, but it's Steve Peacock is his YouTube name, so you can check him out and check that out. He'll talk some about some of the trades he's taking if you're interested in that. Now, all that being said, because I meant to do that earlier, I'll hop back on track. So, I've been holding some trades longer. That doesn't mean that it's right or wrong. And Geronimo comes on, and so Geronimo comes on, other people come on this show. What up, Con? Hey, man, how's it going? First, I don't disagree with Geronimo or Eddie or Kelly or anybody in particular when I'm saying this. I'm not saying this to say I have a specific disagreement with anybody. I don't, actually. But everybody does things differently. And they're learning what works for them and how they can best take money out of the market and make their money. I do what I find works best for me, and what I find is getting the job done. And when I have people on, I'm listening to what they say, and it's more about a conversation back and forth, especially if there's something I'm like, I don't know about that. But it's not just about like, oh, well, this strategy or just selling quick is better or just holding longer is better. It's about understanding what they look at, their opinion, their experience on trading. So when I interview people or when I watch people, I'm trying to get a greater breadth, a greater like understanding of how they see things. And most of the questions, the stuff I'm asking for is to kind of allow me to, and allow others, the guys watching, to actually kind of, maybe gain some understanding and perspective. Some people like to hold trades, and like Kelly, it's like you get in, you have a level that you're looking for, or you have a trade plan for that trade, and that doesn't mean it's so written out, essay of a trade, but just like, I am looking for this to drop and I am looking for it to sell short. Or I'm looking to do this, I'm looking to do that, so I'm gonna get in and I'm looking to short Tesla here. There are some days when you could do this and you'd be like, and I'm holding it. Today I didn't, I just sold. Because here's what I've been doing. I've been scalping most names until a trend sets up in the market for the first 30 minutes or so. So most of what I'm doing early, unless it's a name that I believe has, like it just broke through a big level, it doesn't have any moving averages over its head, it is way out or underperforming the market, I'll hold that longer because that's what's been working for me. But I'm not just entering trades and then deciding if I'm going to hold them. Sometimes my trading plan is to quick scalp something early. And I usually build up my day capital, or how my day is going to be, my risk tolerance and all that other stuff, with how I trade in the first 15 minutes or so. I may or may not take any trades for the first, 30 minutes or something. And then or not 30, 5 minutes or something, or 2 minutes, and then I start trading. And if I'm just doing good and I'm trading and there's a trend setting up and I get a good pullback on like some of the beautiful, like, just textbook into the know your limit, and I jump in, I might just hold that trade. I might get in it, and my plan is, hey, I'm going to hold this. I'm going to fib the next line. I'm going to hold this, and I'm going to sell the pop, or I'm going to take small size. So it gives me a little bit of room, and then I'm going to play this whole thing, and I'm going to let this thing run, because my trade plan, as it were, because I do a mix of scalping and then kind of holding some things for a little bit more of a move, will adapt based on how the day is going. If it's a choppy day with low volume and stuff, there's nothing wrong with selling quicker, and there's nothing wrong necessarily with holding longer, as long as you're not doing it because you're trying to make money. And you're like, okay, I think Tesla, let's say you bought Tesla early, or you looked at something, some moving averages on the hourly or the daily or the 1500, and you really liked Tesla when it broke out. And you're like, hey, I'm going to get in and I'm going to hold this. I really like it. There's nothing wrong with that. And there's nothing wrong with coming in and saying, I'm just going to play it. I am not sure how it is. I'm just going to take the scalps when I see them. But you have to be able to identify that in what you're doing and not mix the two, and then get FOMO and jump back and forth in between the quick scalping like I was doing early, and then the longer holds. Because what happened to Robert will happen to you, and it happened to me. It's like I was up a couple grand, and then I went all the way back down to basically flat, because and it wasn't a bad trade, and I still actually liked the trade. And I'll talk, and I kind of want to mention this in a second on the difference. But I had done square, and I liked square long early because of its relative strength, and it didn't really go up that much. But I took square on this pullback somewhere in here, and I was probably like 40 cents up or something right here, 30 cents up on the contracts, and I didn't sell them because the plan was to let it go through. And then it basically just chopped around here. It dropped all the way down. It didn't fail. It broke up. It chopped back down. And I was planning on leaving, and I didn't want to sit in a position. So I was like, I'll just take a small loss. And I took a loss here, and then it ended up going. And, I had a plan, and my plan sometimes is for a trade to work quicker. What's up, Rebecca? And I'm a scalper, and I like to scalp. So sometimes my trading plan will actually change based on other things happening in the market, based on me just like my plan wasn't to sell this until it hit here and broke down, but I decided I wanted to go golfing. I decided that there was a couple other ways I could make my money that was more that I thought was easier to make money. I actually ended up at account highs. I didn't like sitting in square because I still liked the trade, but I liked other things more, and I don't like to babysit positions when I'm watching something else. So yeah, self-OODA loop. So I'm sitting there, I'm watching, I'm like, I don't like sitting in this. I'm basically flat. PI could get me there, could not get me there. I'm just going to get out of this. I don't like what the Qs are doing. I think I can make money in this name. So I just get out of the position, and then it does go, and I'm not sitting there FOMOing. I'm just like, okay, I don't care. Yeah, square went, that's fine. On a different day, I would have probably just sat in that trade until it got out. So sometimes losses and that self-OODA loop isn't necessarily a bad thing. JR will never get out of a position sometimes. He'll get in the Qs, and unless something drastic changes, he's like, it's either going to fail this level or it's going to do target. Kelly's the same way. If you watch the video I did with Kelly, and maybe someday I'll be that way too, but it's like if his target was the 200, which was my actual target, I didn't know if it would break out here. I was going to sell most of it at the 200 and then hold a runner. And I probably would have got stopped out down here, but it was to hold a runner, and it didn't work the way I wanted. It didn't work as quickly as I wanted, so I just got out. Kelly, if he would have taken this, probably would have still been in it, although it's below the 2-minute 200, he would have taken it. But if he would have stayed in it to target. JR would have stayed in it to target because he had a trading plan that said that. I am much more flexible with stuff like that as I go. As long as I'm not doing it, and in my opinion, and this is just my opinion, as long as you're not doing it because you're FOMOing or because you're mad or you see Tesla pop so you're going to get in, or because it's not like, if you have a strict trade that you're really trying to trade, that you're trying to get done and you want to get better at that, that's okay. And you should be able to hold it, and you're not wrong. The trader who held this instead of selling would have won in the trade, or who knows, they could have failed and you would have lost, but they could have won in the trade. And they would have won in the trade if they held it. I would have won in the trade if I held it. I didn't. And that's okay, because I decided based on market conditions that I didn't like the way Square's price action was moving. And while I still thought it was going to retest the 200 and then either fail or bust through it, that I didn't want to sit in it because I didn't have the time. I wanted to do something else. So I was like, I'm just going to take a small loss and I'm going to go do something else. So be careful when you're doing your trading plan that OODA loop is going. And if I do longer trades when I have a trend in the market, not when I have a a kind of choppy below the 2-minute 200, which I left here. So when you're like, oh, the market was great today, yeah, but I left at 10:15. Like, I was on my way to the golf course sometime after this breakout because I caught a breakout. It might have been Tesla or something. So like right in here after it broke out, or was it in here? It was, I don't remember. It was somewhere in here. It was before 11 because I was golfing at 11. So it was somewhere in here. I got done. And at that point in the day, like, we hadn't proven that we were going to break out. It was right in here. It needed to test this level and fail. And I know because I said, hey, watch the 43 or 343.69. That's a level. It needs to test. It needs to get above that. It hit it the first time. It failed. It came back to the 21. The Qs did, and then busted out and continued higher. So I didn't want to sit there in it. And that wasn't wrong. It wasn't a bad trade that I sold Square and took a loss and then went and scalped around in some other names, because that was my overall plan for the day. And I don't like babysitting too many positions. And also, depending on how the options move, you can set stop limits on options, but they don't always work as well, especially if there's a spread in the name. You put a stop limit in there, it might just get filled at the stop sometimes, you know, depending on the volume and other stuff like that. So you do have to be careful. So the options I ran in Square didn't really work for that. And like Robert said, you know, if you hold names, and this is important to know, if you hold something like Amazon, you gave back $5 or $6, $5 of $6, or $5 or $6 in a pullback on a contract. There's nothing wrong with financing your stop. And if you're going to hold trades for a little bit of time, yeah, sure. You're not necessarily going to make the most money that you could make on that one trade if you just hold the whole thing to target and you just buckle down and you force yourself to hold it to target. But you're going to have a lot better time and a lot easier time trading and actually letting your trade play out if at some point you finance your stop. Because I tell you how it is so easy for me to hold a position if I'm in 20 contracts and it busts, and let's say my target would probably get me 2 to 5 points, and I'm in 20 contracts and I'm up 2 points or 2.5 points, and I sell 10, at that point, that trade means nothing to me. It is so easy to just sit there and to let it ride. $5 of $6, and then you sold. So yeah, you were up 6 points on Amazon, and then you were just like, I'm going to hold it, and this is going to go forever, and then you're down to 1 point. That's the danger you play when you're holding. I shared a trade in here, which I probably still have, biggest loss. Oh yeah, biggest loss. The biggest loss trade where I held a Tesla trade and I ended up losing, you know, I got in at $57 and got out at $42. Like, I shared this a couple weeks ago on a show. because there was some market news that just tanked it. How do I zoom in on it? Look at that. Look at that. Look at that loss. Look at it. Look at it. That's what can happen to you when you hold things. There's nothing wrong with holding things. There's nothing wrong with having a target and a trade. But you need to be comfortable with what you're doing. It does. It takes a lot of mental energy to kind of let that stuff kind of go out. Yeah, I do that sometimes too, is taking profits and re-entering. Like when it hits when it hits a area of like short-term resistance, I'll sell and then I'll miss. That was a while back, that trade. I think I still was green on that day. That was just like it was like bad market news, and it was like instant. Rose got caught in that too, actually. That's true. It is so true. It doesn't matter. I didn't get in because of FOMO. I got in because of a trade. What's up? Welcome. And it's really important to understand that, I think, as you make a transition to trading both styles or to trying to trade the longer holds. You have to have a plan, and you have to let that plan play out. And the plan needs to have multiple parts. And Eddie can correct me if I'm wrong here, and I should have asked JR this on the show, but I was thinking through when I'm looking at a trade, and this can be a 1-second trade or a 3-second trade, like you're trading a pop or a scalp, or it can be a 30-minute trade. I had a 45-minute trade the other day in Twitter. 45 minutes. I was sitting in Twitter calls. Just watching them grind up. I was actually gaming. I was like on Total War gaming while I was in Twitter calls. But I was thinking through what kind of your trade needs to have. And one, it's how or when you want to enter. And I have that in my head before I enter. This is what I'm looking for. And then I have a plan B entrance, which is, am I or am I not going to get in if it just starts ripping? Or I start seeing green tape and it's close to my level. Those are my two things I have. So step one of my trade plan for sitting down for and this is something that's so fast in the OODA loop. It's not something I'm actively thinking about. This is muscle memory trading to me. What am I looking for to get in? I'm not just jumping in. I'm not just bending. I'm not just, I like it here. I like it here. What am I looking for to get in? You know, on the triple Qs here, it's like, hey, it's coming down. It's kind of choppy. It hit the 200. It failed. Okay, what do I want to get in? I want the 21 and VWAP to hit. All right, so I'm going to leave that alone until 21 or VWAP hits. Okay, now when it hits, okay, so it's coming down to hit. Okay, so when it hits, what I'm saying in my head is, all right, do I want to buy it on the 21 when I start seeing green tape at the next 1-minute breakout? What is my my entry? So that's kind of step one of your plan. That's kind of step one of what do you need to happen to get into a trade. I'm looking for this and I'm going to get in this. I'm about to get in this here because all I need to see is whatever I need to see to happen to get in is about to happen. So step one. There you go. Yeah, and Eddie, for that, like, Geronimo would totally be like, well, depending on if you had a target and you sold it early, you should have held a target. Or if you were just trading and scalping, you just hold it. But yeah, whether or not it's worth it, it doesn't matter. Never chase. Like, you need to have a reason for your entry. So step one of your trading plan or your target, whatever it is, is entry. Second and third are interchangeable, and they pretty much happen at the same time. To me, it's my exit, and my exit on both ends, your stop exit and your target. If I'm trading Tesla and I'm scalping it and it hasn't proven to me that it's within a leg of a move and it's not just consolidating and it's breaking out or something, there's not resistance overhead, I'm looking for like I'm looking for a quick pop. So is my target for exit? So there's the Mark Melnick, the strategy, kind of like your C strategies, your stuff like that. I am looking for a quick pop to get me 25 cents to a point to whatever it is. PI dependent. It's like, okay, green, it popped through the level. I'm out as it pops, and I don't care what it does after that. As long as you don't care what it does after that, which is what you should be doing when you get into the C strategies and stuff, then that's your exit, and it doesn't matter. There's no, oh man, I should have been in it. Now we joke about it, but there's no, I should have been in it. It popped 6 more points. Yesterday, Tesla popped, and me and Mitchell both sold right around the same time, and then Tesla popped 5 points or 4 points right after we sold. I don't care, because that was my sell point. Like, I was just looking to buy it, to give it about 5 seconds or 6 seconds after it popped to rip, and it ripped 10 seconds after. And I made 2 points on the trade instead of making, like, I don't know, 8 points on the trade or 6 points on the trade, whatever. That's completely fine, because my plan was to get in. At the same time, you have to have the exit plan at that same time. It's okay, I'm buying it, so like for instance, it's like, okay, I'm going to buy it here on this candle. So this candle popped up, this candle's green. So you buy the Qs here somewhere at this candle. Okay, your exit, let's say I think it's going to go to this trend line, because I had this support level here. So let's say that I have the quick sell plan, that my target is just a breakout and I'm just going to sell on the pop. You sell on this pop and you're fine and you're done. Your exit, maybe your exit is like, hey, I want it to work within 5 seconds. My exit could be the bottom of this candle with the previous candle, the red one. It could be the bottom of the current candle. What's up, Naveen? Or Ari? It could be whatever it is. You need to have that in your head before you get in. Because Geronimo says, and other people have said it, and it's so true, you're your most clear, mentally clear, when you're not in a trade. So like when I'm getting in, I'm like, okay, I'm looking to get in. So it's like the Qs are going in, all right, I'm waiting for them. And I'm just using this as an example, hypothetically. I'm not saying the chart's great. I'm not saying anything. It's just hypothetical for playing this particular line here. It's like, okay, failed the 200. I think the Qs are going to break out. I'm looking for an entry. My entry is going to be off of the 21. I'm just going to sit here until it hits that. This is a 2-minute chart. So this is a decent amount of time. It's like, all right, chopped around for a little bit. All right, we're on the 21. All right, I'm going to buy in this candle here as it ticks off. All right, I'm in. My exit is going to be the bottom of this previous red candle, so I'm going to give it some room. If it breaks that, I'm out. Or you could say it's the 50, the simple 50. So whatever it is, it doesn't matter. You need to have it. So you know what you're doing. And you have the plan. You could say, now here's when holding something is important. To target, I get in it and I'm like, all right, I think we're breaking the 200. So here is the third part. So you need your exit or your target, and you need your stop loss. Those should be fairly instant and happening roughly at the same time. Unless it's a longer hold, maybe you can change your target on your contracts or something like that, depending on news flow and stuff like that. The target can sometimes change, but generally speaking, that will roughly remain the same. Or you can hold a runner, you can do other stuff like that. The third part is, are you going to take profits? So the third part is, are you going to take profits? So you're like, okay, I think we're going to test. Like at this point in the day, I was very positive that the Qs were going to test 43.69. If I would have got in this, my target would have been 43.69. Now you could have got in this by doing a fib retracement. You know, you could have done it by, oh look, it hit the 50. Oh look, it actually hit the 50. There you go. There's your 50% retracement on your first leg, and then you could say, you know, this is my target, which was actually the 127 line, which I don't have pulled up here. I need to edit this to actually add that, but this was 127, so that is an easy target. Okay, so you're like, what do I need to get me to that point? What do I need to do? do I need to take profit at the 200? There's a good chance it might shake me out here. I don't want to lose like uh oh, my one of my kids are waking up. I'll give him a second. Might have to run upstairs. So just gonna give him a second. So Robert said that you held Amazon and you lost 5 of 6 points. So you lost 5 of 6 points on this move here, or not on this. I'm using this as an example. Pretend this is Amazon. You're in it, it's up, and then it rips down, and then you sell it for 1 point instead of 6 points. Same thing here, except I'm using this as an example. If this could happen in your trade, your target is still did I delete that line? Son of a gun, I deleted that line, didn't I? I'm gonna have to redraw that line. But we'll pretend that we'll just say it's, what was it, 20 and 69? 68, close enough. We'll say that, that's still your target. This happens, you don't sell if your goal is to hold it to here. But what you could do is, in that soul would be soul crushing, but here is how you actually are able to hold through. If you say, I'm going to take profits at some point near the 200s, like, hey, if it pops up and then you see it chopping in a red bar here, yeah, sure, it could just rip the 200, but you know what? I'm going to take some profits here to finance my stop near the 200. So it went up, it went here, and you would do, yeah, Kelly would, but I'm talking about how to get there. If you're Kelly and you can just add all day, you can do that. But if you're trying to learn how to do this and get comfortable doing this till you get to the point to where you can trust yourself, because Kelly does it because he trusts his strategy. Well, how do we build strategy as traders? How do we get to the point as a trader where we can actually be able to do that? No, you're good. I got you. I know. I got you. I know what you're doing. And it's true. Like, if he's like, oh, failed breakdown, going long because it failed to break this elephant bar, Kelly would be adding, like, right here. Kind of did break the elephant bar here, but he would be adding. And you could do that. But if you really want to be able to do something, and you want to be able to hold it, you could sell some on the pop, and now you're holding 10 contracts of the 20 or whatever it is, and your stop is still down here because that's your original stop, and you're like, I'm green now, and if it goes all the way down, I still made my money. I think this is going to hit this level, and it is either going to break the 50% retracement line or the bottom of this candle that I entered on, or I'm letting this trade go, and I'm going to see if it goes to target. And then you sit in the trade and you let it go to target. So that's the fourth rule. Well, what rule is that? So rule number 1, know what you want to enter, what you're looking for, wait for it. Rule number 2 is the stops. You should have an idea of what your entry and exit is before you click buy. And this all happens in under a second or two for me. Before, when looking at it, and it can constantly adapt, but you kind of know it then. Third is your financing your stop. What do you need to get to your target? Is this a quick Tesla scalp where ain't no, but pretend this chart's Tesla? You really want to hold Tesla into a 2-minute 200 and have it do that to you? Like, no. So is the plan just to sell some really quick? Is it to sell 8 of 10 you got 10 contracts, you're going to sell 8? Is it just to sell it and wait for the pullback off the 2? Like, what's your plan? How do you need to do this to get to target? Is the target just a quick sell? Maybe it's a name you're like, I don't want to hold the whip. I don't like holding Tesla. I'm just going to sell the pop. Okay, don't take a longer trade. You have a smaller target. The target is an initial pop, and then you're going to sell. What do you need to have that trade accomplished? One of those things you need is proper size, because if you go too heavy, you're going to be too emotionally imbalanced to be able to take the trade correctly. You're not going to be able to sit down and be able to unemotionally take the trade, watch it hit. You're going to be thinking about the money you're making, the money you're not making, the money you gave back. Like, man, you just lost 5 of 6 points, and I just gave all this back, and you have all that in there. You need to take a size that actually allows you to trade without it stopping you and without it stopping your ability to actually take that trade. Like, if you entered here in Tesla, let's pretend this is Tesla again, and the options are moving 50 cents at a time, and you took 30 contracts because you really think it's going to pop, but it kind of goes up some and then pops down some, and then, and you bought it up here and then it pops down here some and it doesn't go right away. You might have went too heavy, so you actually sell, and then you miss the move, and then you get FOMO, and then you buy up here, and then you get ripped down, and you're done. And then you lose 3 points, and you had a plan, and you didn't stick to it. Well, you didn't follow Rule 3, and you didn't actually. Rule 3 is like A and B, which is first, part A is size correctly to where you can actually take the trade and let it play, and or sell some and finance the rest of your trade. So if like, I'm going to buy this, I'm going to sell the initial pop, and then I'm holding a runner to target. The reason we want to hold a runner to target, it's not just so you can make more money, it's because that was the idea for the trade. But you understand where you're at in your trading journey now, and your mentality is that you actually need like that reassurance that it's going to get there and that you're already going to make money. And then after that, you can move your stop up, you could do all that kind of stuff. So, there's a lot of other stuff you could do after that. You get this big bar, it pops up here, it pops up above the 200. You could be, I'm going to move my stop to here, or I'm going to move my stop to here. You can move your stop somewhere. You can move it back to that support line or something, or the 200 after the fact. But so that's 3, and that's 3 A and B. So you could either break this down into A and B, or you could make each one a rule. But you either need to size small enough to where you can let the trade work, or sell some on the initial pop. And if it's a smaller time frame trade, then you just need to size appropriately so you can actually take it and let it trigger or fail. Because even at a Mark 1 or a Know Your Limit 21 or a Know Your Limit 8, as soon as you buy it, you need to, even if your time frame is 5 seconds, we say at the minimum 3 to 5 seconds from that you want a trade to go. So if you're the most cautious trader, like, I have to be green right away, you're going to get in a trade, and generally it's like 1 Mississippi, 2 Mississippi, 3 Mississippi, 4 Mississippi, 5 Mississippi. I might get out of this. It's not going. I thought it was going to go already. For me, it's usually 10 seconds if I'm looking for a really quick scalp. You need to be sized to where if it's just sitting still and there's no red tape coming, that you're not sweating bullets in that trade, and you're going to let that trade work. Like, this is a good trade. It's on the 8. I just have to give it a second to get going. The buyers are going to come in. It's not breaking down. It's going to go. I'm just going to let this trade work. And you need to have the correct size to do that. That's a long trade. 26 minutes. It does. Yeah, it definitely. That's a long hold, especially in Amazon. I mean, good trade. I have to go and look at what you were doing. Yeah, and Amazon's definitely not the best place to start for doing anything like this. I do it a lot in Square and in other names that are a little bit slower moving. The queues, I do it in the queues. Excuse me. And who asked? Somebody asked if I do this with how JR trades the queues. Oh, Rob, you did. Yes. I do and I don't. So yes. Sometimes I trade Google instead of the queues. So I might look at the queues and look how it's moving, and I find other names that are moving like the queues, and I use stochastics to catch them like Google. I probably would have just traded Google today. If I was here, I would have bought Google, like here. Like, Google broke up, the queues broke up. I'm like, all right, they retest that level. They hit Google retest the 2-minute 200 on the long side. I am totally long Google here. And I bet the stochastic setup on that too. Let's go to my other charts. What time is this? 2-minute 200 at 10:44. Man, I didn't even have to stay that much longer. What's wrong with me? Is this today? Yeah. Oh, there you go. Yeah. Yeah, once Google was like flat, and then once it broke out, yeah, right here, you have, look at that in Google. Let me go this over here on the 2-minute. Oh, look at that beautiful setup I wasn't here to take. Oh, man. Yeah, I would have taken this 9 times out of 10. 9 times out of 10. Here's your 2-minute. So you've got retest of VWAP after the Qs and other names break out, and then you do it again here. But yeah, your boom goes up. There's it's the low here, or if you take this breakout, roughly you're looking at you know, that's a 10-point move in Google if you catch the whole thing. Those options are going to move at least, go look at the delta to see what they move. It chops around, maybe you hold it, maybe you don't, pulls back down to the 200 again at 11 o'clock. Oh man, I would have taken that trade like 9 times out of 10. Pulls down, hits the 200 again. And the stochastics are a little bit lower there. Yeah. Oh, yeah, look at that. That is beautiful. Yep, that would have been my trade. I would have been 10 to 20 contracts in that right there. 100%. 100%. 10 to 20 contracts in that, and I would have been holding through day highs. I would have found a target up there, and yeah, that would have been good. No questions asked. Take a VWAP, retest. If it hits that 200 here and holds it with the stochastics down, especially the 1 minute being this deep, a triple test while going high, yeah, that's an all-day take. With the Qs being strong finally above that, yeah, that's beautiful. Beautiful setup. So I do trade the Qs like Geronimo, but I'll go trade Google. I will do it with the Qs too. I find Google easy to trade. So man, I was not here for that trade. That would have paid for a lot of golf rounds. Yeah, but I had already gone golfing at that point. So I'm off topic. So to get back to topic, you need to have that in mind, and you need to have that stuff set. So that's 3, 4, yeah, finance your stop, or understand what you need to actually make the trade work. And then the fourth thing is be flexible. What I mean by that is, well, I guess I could say be rigid and be flexible, which is, I'm not actually contradicting myself because I want to, let's explain. Be rigid in the way that you have a trade that's going to go here. So unless something market related happens, you're going to let this trade work. And if you need to sell another 25 cents after it runs, after it runs up, you need to sell another 25%. This is medicinal. I've had a throat mess and sinuses or whatever since it's cold, or since the weather's all the pollen and all that stuff. I can barely, that's why I'm like coughing, and little head cold / sinus has been bothering me, so sorry about that. But there's nothing wrong with selling another 25% and letting the trade go. You say, how does Kathy do it, Rob? She's done it so much. She has her trade, and she's following her trade. Her risk parameters are there. She knows what she's looking for and what she's at. She understands what she is doing and what she is looking for. It's not the same thing that we're looking for. Remember, we're doing options. We're doing on these short time frames where, all this. She has a bigger picture. As a bigger picture trader, she's looking for something else. So yeah, I figured that you did great today. Like, I literally thought that, Naveen, when you were, when I saw Amazon, I'm like, Rose and Naveen, or Ari, had a great day today. Like, I was glad for y'all. So there's nothing wrong with taking another 25, but let your trade work. Unless some type of market condition comes in, it's like, hey, all this is happening or whatever it is, and, it's like, I don't know, Russia nukes Kiev, and then you're like, well, I'm staying in this until it gets out. No, you're kind of stupid. You should probably get out of your position. So you should take stuff like that into account, but short of other market conditions, get out of the trade. You know, sometimes other market conditions for me, depending on the name and the size that I'm in it, it's like, I mean, I've told y'all before, I generally don't keep all of my money in my account. I keep a certain amount in it, and I drain it down. And most of my trades are with 50 to 100% of my account. And I just keep it at a certain size, and I generally trade with that same size all the time. Sometimes it varies and it goes up and down, and it's in this different area. But often that's what I do, or I'm very close to that. So I'm not babysitting 3 or 4 positions. Here's another time when I get out of something. If I've sold it, if sometimes I will just hold a runner, and I'll have a second window open, and I'll hold a runner, or I'll put in a stop loss. In Fidelity, you can put in stop losses even on your options. So I'll put in a stop loss on my options sometimes. But sometimes if I look and I'm like, man, these other names look really good. Yeah, I still think this is going to hit target, but I want to go trade this. I'm going to get out of this position and I'm going to go trade that stuff because that's what I want to do. And I don't want to watch this because this might mess up my OODA loop, because I'm not good. Like if I'm in even 1 Google contract, but 10 Google contracts, and I'm over there scalping Tesla, it's going to mess with me mentally. And I might, like, I need to do this, I need to do that, and it might actually mess me up in my scalping of like a breakout or some really good news or something that I think is market moving or something like that. I will be flexible enough to be okay with getting out of a trade if there are other trades that I actually want to take and that I want to trade. I find that to be helpful because there's not going to be FOMO there. I'm not going to be mad if Google runs another 20 points after I sell. Like, I chose to do that. I wasn't necessarily, it's not because I'm FOMOing. It's like, I want to go trade this. This is a strategy. I have a reason to get into this name. I really like this setup. I've made most of my money in Google or in whatever name, Amazon I'm trading. I'm going to go trade this other name. And that's kind of the 4th or 5th, depending on how you break out these rules, that you need to kind of accept and add there is be strict with yourself and let the trade work. But for scalpers, at least for me, if you're not good at babysitting those other positions and such things, like I don't like to do, you either size down to where you're not babysitting it anymore, or you can get out of the position if you're going to go trade something else that you want to trade. And I think that's kind of a simple, and I don't think JR does that. Actually, no, he doesn't. He leaves his positions open, and he's just a better, he's a better trader than me, and I have no qualms with saying that or with thinking that at all. It doesn't bother me at all. So, he's doing his thing, and he can do that. I right now don't like to do that. It doesn't even matter if I can or I can't. Sure, I can. I don't want to. I don't like to. So I don't. I don't need to. Like, I make pretty good money. I don't need to do that. So to me, I cut positions because I see something else I like more than the rest of my position. Or the Qs hit this massive level, and I've been trading Google and Amazon long, and JR is like, this is a massive level of, resistance here. There's a good chance this breaks down. Even if my target was a little bit higher, yeah, it might get there, but now there's another risk factor that just came into my trade. I evaluate those as I go. What I'm not evaluating is the price action like this moving. It's like if my target in Google was up here, and I got in it here, and then it bounced up and it came down. I'm not reevaluating this as risk. I'm not reevaluating this as risk. Why? This is my stop, assuming that's my stop. It's like, that's my stop. I'm not selling till it gets there. So this is not new risk. If it's like, hey, Russia nuked wherever, or they're using something, or I don't know, something happened that's just massively like, shorting the market. Everybody's just like, let's get out. That's new risk. That's taking in new information on my trade. This price action back down to the 21 is not factored in unless you moved your stop up. So, um, yeah, and so those are kind of the four rules that I kind of thought through, four or five, whatever, six rules that I thought through, and I was trying to think, what do you need to get better at this if you're going to apply these to every trade? Because even for scalps, these rules apply. Think about it. Like, think about the rules, and what if you actually go through a trade and go through something. Um, think about what you're actually doing abstractly. After the fact, after you're done with the trade, like in the moment, you actually were just jumping in and out of a trade. Like, there's more than likely your OODA loop was going so quickly that you were not really like comprehending all of these things. I don't comprehend all of the things I'm telling you guys in a slow hour-long video, like in real time this slowly. It's just like this. But if you stop and think about it, and you break down a trade psychologically like that, and what you were doing and what you were looking for, if you find a failed trade, unless something was happening, often there's a failure in one of these kind of rules for your trade. Something didn't click, something didn't work. And because of that, you're having, you have that issue. Or because of that, you took too much size, so you couldn't hold and it went without you. Maybe it was just a bad trade. Like, you can also have the setup needs to be there, and that kind of goes hand in hand with what you need to have happen by. I'm assuming it's a good setup and a good position, and all that kind of stuff. So yeah, keep those things in mind if you are doing stuff like that. And even when you go back and review your trades and you think through what you were looking at here, you should be able to look at it and be honest with yourself and be like, I was just looking for a quick pop here. I held too long. I was doing this. Like what were you doing? What could you have done differently? And not what could you have done differently. I don't necessarily like that, because hindsight's 2020, and I could always tell you what I could have sold. Like, Rob, I could have sold when it was at 6 points. That's what I could have done differently. No, what could what were you doing wrong? Were you doing everything what you thought right and was part of your trading plan, and it just went against you? Were you just holding just to hold? What was was there one of those rules that were broken? Are you completely fine with only making 1 point on that trade? And you held it for 20 minutes, but you don't care. You wanted to hold it, and yeah, it whipped you out, and you know what, you got whipped out. But in the end, you were fine with getting whipped out. There are sometimes I'm in a trade and I'm like, I'm just holding this position. Like, I don't care. I'm in 5 of my 30 contracts and I'm just holding it. I don't care if I get whipped out. Or I take a trade with 5 contracts or 10 contracts. I'm like, I'm still in this, guys, and I'm up 50 cents, and I don't care if I lose a point on it. Like, I don't care if it goes against me a point and I lose it. I'm completely cool with that. I'm holding for this level to break. There are literal times I'll say that, and I'll say it on the mic, and I'll say it to myself. It's like, I'm in this trade, and I kind of say that, like, and I say it out loud to myself, and I'll say it on the mic. It's like, I'm in it here. I'm green. I could sell. I am going to hold. I don't care if I lose. When I say I'm going to hold, I have to say I don't care if this goes against me and I lose, because it may not have been here's when that happens, and here's when the flexibility part happens. On a short time frame, Mitchell did it really well today. He called out a long position, I think, or a short in Tesla. I can't remember, but it was a breakout or breakdown, and I was scalping it. And then he said, "Oh, you've got a 15-minute breakout here." And then I was already in the position, and he's like, "Oh, you have a 15-minute breakout here in 5 seconds." And I was like, "Oh, okay." New information that I allowed in. I was about to sell. I just got new information that I allowed to affect my trade and hold a trade that I was about to sell for that breakout. And then I made 2 points on that trade instead of making 50 cents on that trade. I don't remember what I made. I'm speaking in like random numbers. So, being flexible to the last rule, for the negative and the positive. If you're in a position, but you know what I told myself when Mitchell said that was, okay, there's a 15-minute breakout here. The risk reward is still good. So JR likes to talk about, and he preached it on last Friday's show, was knowing your risk reward. My reward just went up massively. It's like, oh, I'm in a position that's green, and I've got a 5, 15-minute, hour breakout that's about to close, and we're near the level, and we're in the middle of a breakout. Okay, I'm going to hold this position. Now there's risk. I could lose my 30 cents, 50 cents, whatever it is, on this trade because it could fail and then break out later. But my risk in my head says, okay, I'm in the position. I'm green on a trade. So basically this is now a new trade in my head. I'm like, okay, I've got a new trade here. I'm already in the trade. So I'm starting green on the trade. Last trade doesn't matter. That worked. I'm now green on the trade. I'm holding this, and I'm okay if I lose a point from this point on and my other trade goes red because of this. I almost view it as my previous trade is closed. And I talk about this when I say that, like, let's pretend that, okay, no, this bar was red at one point. So let's look at Google here. And so we have a red bar here in Google. This bar was red at one point. I say this on the mic sometimes. I'm buying this when the bar goes green, or I'm looking to buy it when it starts ticking up. If Google sat down here and sat red on the 21 or Tesla or something else like that, and it's just sitting there and there's not a lot of sellers coming in, I'm like, okay, I am going to buy, and I pretend that the bar is closed. So in my head, even though this bar is already open, I say, okay, this bar is now closed for the sake of this trade. Unless it rips down and then I get a new bar, as it were. Like, this bar is now closed. From this point, I'm pretending this bar is closed. And I trade it like it's closed. And if it breaks out, I take it. And I don't mean even break out. I just mean if it starts ticking up to where I would buy it if it was closed at this exact point, I buy it. I'm not saying that's right or wrong. I'm just saying when I do that, that's what I do. Same thing for if I'm in a trade and it goes up, and let's just say, like, I can't really do it on this chart. Let's just say I wasn't paying attention to the big time frame and I couldn't see this breakout over here. And I was in Google here and I was about to sell because I didn't like this wick. And I'm like, I'm just going to sell right here. And then somebody says, oh, hey, you have a 15-minute breakout or day high breakout I wasn't paying attention to, hypothetically, in this situation. I'm going to take it here. Or I'm looking to take this trade and I'm already in it and I'm up. I'm just going to be like, well, I actually like that too. I'm going to continue to be in this trade. I'm going to let it pop and then I'm going to sell it. I'm using these as hypotheticals. You don't have to use the same thing. I'm trying to use a chart to explain it, but I take that stuff into account within my trade plan. That's what my daily OODA loop trade plan is that goes through my head when I'm in something. If I'm in a position and then everybody else is buying it and I'm already green in it, I'm like, oh, my initial trading plan was to sell here. Sure, you can follow that initial trading plan, or you can allow other information to come in. But when you allow the other information to come in, you have to accept the risk that comes in with that information. The risk has to be accepted as well as the reward. And as long as you're mentally okay with doing that, I personally am okay with having a flexible trading plan when I'm in it to an extent. So I hope that makes sense, and I hope that's kind of helpful. But I thought, like, as I was thinking through things, it was kind of like that. And, more often than not, I stick to the rule and the flexibility isn't really there. Occasionally, I allow the flexibility, but it's not all the time. And you have to make that judge for yourself. And you might just be like, hey, I know I'm never going to lose if I'm not if I'm flexible, I'm going to take some more losses. I don't like that. I'm not going to be I'm not going to be flexible. Okay, cool. If it's the other way and you're like, hey, I'm already up in the trade is good, I don't like breaking because if I just keep my rules, I'm never going to have those losses and I'm going to be fine. Yeah, that's fine. You don't have to do that. I'm telling you what I do and what my rules are and how I trade throughout the day. These rules are the most important and actually happen on a very slower time frame later in the day. Early in the day, it's all very fast. You're just jumping in sometimes and out, and the action's quicker. Over here in the day, when things are slower, all this happens much, much slower because the names are moving so slowly. So slowly sometimes. And so you can actually kind of think through this and draw fib lines and measured moves and all that kind of stuff. So it's like I can get in a trade and I'm like, I like this and I like it to continue. Like I like Google. So it's like so easy here in Google. It hit, it bounced, it went up. You're like, I'm going to wait for it to 21 again. It hit. And then, you know, you're in the trade and this is 10 minutes later and you're still in the trade and you're up. Man, this is a little bit of FOMO here because this was so easy. You're up 10 points. And you're like, well, what am I looking for? Well, let's draw a measured move. Well, let's do this. And you could actually kind of then develop a little bit, like I think it's going to this level. I'm look at the daily and let's see what I think. And I could take more information in and something like that later in the day because it's a little bit slower. Let's look at look at all this different stuff. So yeah, that's my thoughts. And those are kind of the rules that I think you should take into account, possibly follow, but definitely take into an account. And think through yourself. Let me know in the comments after the video if you, or even right now in the comments, if you think there's anything in here that, you know, any other rules that you would add or anything else like that. You can definitely throw them down and if you want to help anybody out. Y'all got any questions? Been going for an hour, so I don't want to preach, ramble much longer, but thoughts, comments, questions, criticisms, all the C's. No, dude, Google is the easiest name. It's probably my biggest winner. You know why? I hold it for a while and I never get shaken out. Almost never. So look at this. Here's how I trade Google, and I did a video on this. Rob, if you go back in my YouTube and watch the video I did trading Google, you'll see how I trade it. But here's my exit, and my exit is based on the stochastic, not necessarily on the price. You could do measured moves, and I do have price targets when I trade it, but generally speaking, my exit is very closely related to the 1 minute stochastic on the short time. So here is your entry. Look where the 1 minute stochastic's at. It started curling up. So down here, if you look in this area and where this is at, you're down at the bottom and you start curling up. The Q's probably hit a level here too, so you time it with the Q's. It goes up. The difference with Amazon and Google is in Amazon this move probably shakes you out. In Google, your contracts barely move here at all because it's so low volume. You're just sitting in it and you're just waiting for the stochastics to get to the top and to curl down. And sometimes you don't even get out because in this case, I might stay in Google because I'm looking at this. A breakout, Qs are strong, all this. I expect to pull back. So this is just the 1 minute. So your safest sell is right here when everything comes back together. So somewhere in here is your safest sell. And you got to look at the Qs with this too. But at no point in this would I ever be shook out of Google. Now, my contracts wouldn't be moving the whole time, but at the end of this, I would probably be up like anywhere between 7 and 10 points on my contracts. Oh, no, dang, I'd be up a lot more than that. Why did I leave? Oh, so I played my best round of golf today, but I tell you, I would have, oh man, this is just textbook Google trading here. And then let's go to the 2 minute and look at the 2 minute. So the 2 minute in Google timed up with this beautiful retest of the 200 right here. The stochastic was down here near the bottom, not really important because it was in the middle here and it didn't go all the way down at the bottom here, so you're fine. So it's here, comes back down, I'm fine with that because it hit here. The 1 minute is so low. You're expecting a possible pop. Time this up with the Qs at 11 o'clock and tell me what the Qs are doing. I guess I'll look at it since I'm here. Yeah, Qs are fine there. Qs are pretty strong here. Yeah. Basing, flagging a little bit, I guess. So yeah, you're good. Q stochastic's not perfect, but they're tight, which is what you need more than perfect. So they're definitely not perfect, but I do like that this play here. The 2 minute stochastic says get out here. 2. So the 2 minute stochastic says you can get out here, and then it just kind of goes sideways and goes down. Let's go sideways here on my chart. So the 2 minute stochastic goes down, you wait for it to get to the bottom. Yeah, there's scalpable opportunities in here. Generally speaking, I wait for the 2 minute to get down. You're back on the 21. This is a textbook take all the time, 100% of the time pretty much play. It's down in here. The 2 minute stochastic starts curling up. You're on the 2 minute 21 and you take a pop there and you don't get shaken out because your contracts aren't whipping around. So I actually find Google extremely easy to play because there's no whip. I'm not saying tomorrow jump in and trade 10 contracts, and they usually have spreads, so you got to find a contract with good PI, and there's some other stuff there. But as a general rule, I really enjoy playing that, and I have made a lot more money trading Google than I have trading Amazon. Amazon probably will pay you more if you can just hold it. But I find Google to move in a manner that is a very easy vehicle to trade ranges and to trade trends like this. Like this is just a kind of a textbook trend, like a textbook breakout, and you just play that all day. Comes down and hits it, and yeah, just so. I missed some fun in that name for me today. I would have been saying some stupid stuff on the mic celebrating some of those plays. Which you guys don't mind when I do that, right? When I'm just kind of joking around, and I don't mean to make people toxic. I know different people have hard days, but I guess it is one of those things you can do when you have the mic. So yeah, if there's no other specific no specific questions or anything, yeah, think about that. Think about that stuff. If you think it's crap, you know, tell me in the comments. If you think it's good, tell me in the comments. If you do like this stuff, leave a like, share, subscribe. Mitchell, I think, is going to be coming on. Might do a special show tomorrow or next week. I know he's going to come on next week. He might come on tomorrow. I'll let you know. So might just wait till next week to do it. So he'll be on. We'll talk to him next week. Probably going to have some other people back on again. I might try to see if Drew wants to come back on, Eddie, some other people. Roll back through them, kind of check in with people and see how they're doing. I want to see you guys get better and actually continue to improve and to get better at this. So I appreciate you taking the time here to watch the video. If you've rewatched it and stuff, there's a lot to come in the channel in the future. A lot of stuff I have planned and that I'm working on behind the scenes. I just, you know, time. I thankfully got the house sold and stuff, so if I ever stop golfing, I'll start you know, kind of improving the channel and putting some more content out there. But guys, if you do like this, please like, share, subscribe to the stuff, to the channel. Let people know about it. Let people know about the NewsBeat live room open house next week, about the YouTube channel, about the Discord. You can get all that stuff there, and let's keep the community strong. Let's continue to have people here that add value, that help us grow. And all this here is just, you know, a way to hang out, a way to talk through the things that we see, so we stay sharp. But we're a very strong community, I think, of people that care about each other. And I don't care if it's 200 of us or 2,000. It doesn't matter to me. The people that are here, I think, are successful and are going to continue to be successful. So I will see you all tomorrow. We'll trade smart, get some sleep, get some rest, so you come into the market refreshed and ready to go. Have a good one, guys.